Bismillahirrahmanirrahim. Assalamu alaikum, dear students and viewers. Welcome to my YouTube channel, DigiLearnersPoint. Today we are going to cover the uh, question number 3 of assignment number 1 of Advanced Accounting, which has subject code 0444 and its level is B and BCom for aiou University Semester System. Its assignment is related to semester autumn 2022 and its final submission date is 14th April 2023. So let's start reading question number 3, then we will go to the requirement and finally we will see the solution of this question. Record the journal entries for the following transaction in the books of Decent Company Ltd. Uh, Few transactions are given below related to the Decent Company Limited, and they are asked to be please record these transactions in the book of Decent Company. Means journal entries you are going to be journal in the book of journal. So first entry, first transaction is issue 3000 share of 10% preference share. 10% preference shares means the share gives 10% interest rate on each share of rupees 100 each at par in cash. So price of each preference share is rupees 100, which is par value. Then in second transaction issued 10,000 ordinary shares of rupees 100 each at rupees 110. It means you see that the floating price is greater than the par value by 10 rupees. It means and the share has been issued on a premium. Issue 2000 share 10% preference shares again of rupees 100 each at rupees 25 each in cash. So again look at this, the Decent Company has issued again same preference shares of 10% but in less amount as compared to the transaction 1 2000, but at this time rather than par value it will be float on 5% discount. Acquired equipment costing rupees 210,000 against 2010% preference shares of rupees 100 each. Issued 2000 common shares. Ordinary shares and common shares are same or similar words or interchangeable words of rupees 100 each to promote in recognition of their services. So let's move to the solution. First transaction is that as I have noticed here again in cash, the word is in cash, so you can replace bank account with the word cash account. So cash account we are going to be mention it here as rupees 300,000 because it has been issued on par value of 100 rupees, which gives 10% interest rate to its holder. So this is the our transaction, and the second transaction is that if we transfer from share preference share application account to the preference share account. In other words, you can only use a cash account to preference share capital account or preference share account. So I'm going to use this temporary account preference share application account. So from this account to I'm going to transfer share application to preference share capital account 300,000 300,000. So you see here the here it is on credit side, and in the second transaction journal entry it is on the debit side, though it will be cancel each other, and finally it will become cash account to the preference share capital account. So this is a lesson you please write it down by yourself. And then again second transaction is about ordinary share, I think, ordinary share. So share application account to rupees 100 1100,000 or 1.1 million to share capital account. This is 1 million because the par value is 100 and the above value is 100,000. It will be go to the share premium account or paid in capital account. The other name that we have used for share premium account is paid in capital account. So funds have been transferred to share capital account and share premium account. Now in third transactions again we are issue the preferred share to at 5% discount. In transaction A, we are going to float the preferred share at par value, but it is now less than its par value. 95% discount means 100 minus 5 is equal to 95. So this is a transaction. You will replace this bank account with the word cash account. So again I am going to pass another entry. Preference share application account to discount preference share account are paid in capital account. This time it is going to be debited because it is floating on less amount as compared to the par value with the 10,000. So to preferred share capital account is equal to rupees 200. And then we are dealing with the transaction D, which is related to the requirement of the equipment against the preferred share. So equipment account is equal to 210,000 and to share preference account 200. Look at this, the figure 210,000. The figure shows that okay, we have given preference shares at above its par value because its value is and the value of the equipment is greater than the amount of the share preferred share at par value, which is 200,000 and here is 210,000. So the above of 200,000 is going to the premium preference account. So in last transaction, promoters services account to share capital account. So we are giving them ordinary shares. So granted 2,000 ordinary shares of rupees 100 each to promoters for their services. And the solution of this question number 3 has been finished here. In the last I am going to request you, please, if you find any mistake regarding calculation, please mention in the comment section, or if you want to discuss any point, please drop your query in the comment section, or if you want to add something regarding the solution to improve it, your comments are welcome. Thanks for watching. Assalamu alaikum.